What's up everyone, my name is Nick. I've been trading for over 3 years. During this time I've made over 200k on prop challenges and now I trade my personal deposit. And what I've noticed is that many people, especially beginners, as soon as they gain some knowledge and step into trading, fall into a huge confusion about how to actually apply this data. There are tons of examples like this. Some go into ICT, some into SMC, others into technical analysis, but once you face any technique, you eventually hit the same wall. You need to apply it on the chart because the knowledge itself isn't that complicated in trading. But when it comes to execution, applying it becomes extremely difficult. This video is primarily for those who already understand what liquidity and market structure are. Because if you don't understand those basics, you won't understand anything in this video. Let's start with the very basics, time frames. You may have heard in the different trainings that the higher the time frame, the more accurately you can see what's happening in the market. And to a certain point, I agree with that. But the one thing I don't fully agree with is this idea that a higher time frame always gives you a clear understanding of what's happening specifically today, right now, during our session. Because the higher time frames, like the daily, the 4-hour, the weekly, monthly, they are great at showing the overall trend. We can clearly see the trend, we can see how price delivers, how it performs, and that's all awesome. But the real question is, how do we understand what's going to happen here, today, and right now? And that's exactly why I built a simple way to look at the market, a view I call the A to B concept. And to be honest with you, I didn't invent this concept from scratch. I got it from my mentors, extremely talented people who taught me a lot. I simply embodied this concept into my own trading and mastered it in execution. When we talk about trading, it's important to understand one key thing. The only information we're truly looking for is the kind we can apply over and over again as a setup. For example, the setup I'm going to show you through this video, like I could execute it with my eyes closed. I feel the logic behind it with every neuron in my brain. So the goal here is simple: understand the information so we can apply it. And I know that sounds obvious, but that's exactly the problem. Execution is where everything falls apart, and execution is exactly what we're going to focus on right now. Let's start again with time frames, specifically the time frames I use for day trading every single day. I use the 1 hour and the 5-minute time frame. This is the foundation of my trading system. I use the 1 hour time frame to define direction and set targets, and the 5-minute time frame to build and execute positions. Why don't I use more time frames? Because higher time frames can conflict with each other. On the 1 hour, price needs to deliver higher, but on the 4 hour, price needs to deliver lower. And that's when you start getting confused and like maybe emotional, because you don't understand what's happening. So when you trade intraday, your priority should be the 1 hour chart. 1 hour for direction, 5 minutes for entry. Alright, let's actually get into trading. And like I said, it doesn't matter what asset you trade. For most beginners who step into trading, the very first asset they encounter is EURUSD, a highly liquid pair, a very clean one to learn from. So let's break it down. First thing, we need to understand what session we want to trade, London or New York. I trade both London and New York because my schedule allows it, and for me the reference point, the anchor for context, is always Asia session. So no matter what session you trade, start your analysis from the last completed Asia range. If you're trading New York, you might already have information from London, and that's fine, but try to take 1 second, shut everything else off in your brain and reset your view. We're starting from Asia just to build a stable reference point. That's all we need, one stable point to start from. So let's take Asia. Now, what do we see on this chart? The first thing we want to identify is a liquidity sweeps. Many beginners will mark liquidity sweeps in a completely random way, and their chart turns into a messy soup with no cause and effect, no logic, no narrative. So let's avoid chaos and keep it simple. Here's Asia right here. And what delivered price into this Asia range, into this point? It was the New York liquidity sweep from the previous day, right around here, followed by a clear inversion. Let's drop the fancy words away for a second. So after the sweep, the market reacted. Boom! We saw heavy selling volume, bearish pressure became real and objective, and that delivered price into this place. So now we already understand something. First, we have a liquidity sweep, and second, we have a bearish market delivery. This liquidity sweep here becomes our point A because something changed after it. Look, price was consolidating and then sweep happened and the price delivered lower. That's a structure break with a cause. Now, where are the logical point B levels? We have previous day low right here, and we also have liquidity resting here, another B target. And the key thing is, the nearest logical B targets are below. They are not above, they are not here, or anywhere else. We don't use some random levels, we don't use some fantasy levels. The market roadmap tells us where to look. The closest B points based on logic are here. So again, what do we have now? We have a liquidity sweep, we have a bearish confirmation, and we have our B targets marked. Now the real question becomes, how do we reach B safely without getting stopped out by a counter sweep? Because we can't just randomly open a short, because if it was that easy, trading would be a solved game. What do we want to see next? Inside our session, London or New York, we want to see manipulation. What is manipulation? It's when the market prints a fake move against the existing trend we defined. A trap move inside our A to B scheme. I called it a bait move or fake out, whatever. So ideally, we want London or New York to push price higher, maybe grab some liquidity here, maybe run into an imbalance or fair value gap, and give us a chance to build shorts on the lower time frame right around here towards our B target. So basically we want to see a false upward move inside this A to B narrative inside our session, so we can find an entry with a logical stop. So let's take a look at how London delivered. First, we have the Frankfurt session opening. London didn't give us the manipulation we were waiting for. Price actually printed it during Frankfurt timing instead. What did we see? Price made a fake out and we reached point B. It didn't happen exactly inside my London window, but the logic still played out perfectly. It just delivered at a slightly different time, and that's fine. I wanted this move to play out during London, but it happened during Frankfurt session. But again, the logic still played out perfectly. We wanted to see our manipulation, and it happened, but during during another session. So that's okay. Now let's see how New York opens and delivers. New York opens, manipulates London liquidity, gives us confirmation, and we still have a deeper B target below, you remember? Again, another point B level. This means we can now build a short position to this B level and place the stop behind the manipulation. We never place a stop anywhere else except behind manipulation, even if it compromises the RR. And as you can see, price successfully delivers into the next B point. We can call this B2 because the first B level was hit earlier. And this exact deliver principle applies to every single asset on the planet. Let's reset the chart and run it again throughout the lens of someone trading New York session context. I'll clear everything so we can rebuild it step by step. We identify our point A, the liquidity sweep, that triggered the bearish delivery. We saw real selling pressure after that sweep, strong, objective, bearish strength. Then Frankfurt opens, prints manipulation and delivers price into the first point B, perfect. But we still have a liquidity target lower, our nearest logical point B2 level. So what does New York context now give us? We have our bearish narrative, we have a logical target below, and all we want to see at the New York is London liquidity being manipulated. That liquidity could be the London high, for example, or internal London liquidity on the 5 minute or 15 minute or 30 minute. It's also valid and also clean. But in this case, price is already close to London high before the open, and I personally expect a sweep of that high inside the session. And that's exactly what New York did. Swept liquidity and gave us confirmation. And now we can safely build a short position on 5-minute time frame targeting B2 level with a stop loss behind manipulation. So trade executed, delivered, and it's very clean. Okay guys, let's recap it one more time. We had a liquidity sweep, our point A. We had confirmed bearish narrative. We have our point B1 and B2. And the very important part is London stayed inside the bearish A to B perspective before New York Open. Because if London had closed somewhere up here before the New York Open, I would not be looking for shorts, because London would have said, no bro, I'm not comfortable delivering lower, I'm pushing up instead. But in this case, London clearly remained inside their bearish narrative. So New York opens, prints a manipulation or a fake out, we wait for some confirmation, we open our trade, we put our stop loss behind this manipulation, and boom, the trade sets up like a textbook example. And there you go, a clean, logical, safe A to B short with a stop behind manipulation. That's the model, that's the play. Alright guys, thanks for watching. Right now I'm sitting here editing this whole video because there is no editor in this world who understands my concept and who could cut this video correctly. I just want to say stay tuned for new episodes. We're going to go through a million more examples of all of this. We're also going to backtest it, and I want to say follow me on Instagram, subscribe to my YouTube, and I wish you good luck and success applying all of this.